In my career, during most difficult times in the market, recession times, I know there's a big debate as to whether we're in one or not. And I know there are perhaps political dynamics at work suggesting that no one wants a recession in a midterm election year. But we believe we're in a recession, and I think the evidence is accumulating that the statistics that we're getting fed day to day and to which the market reacts so violently may be very distorted by seasonal factors. And I'll get into that in a moment. But if we're right, then the downturn during the first half of the year, 2 quarters of negative real GDP growth, that downturn might be worse than has been reported.
Hello and welcome to Wealthy Value. In today's video, Cathie Wood updates about Fed Chair Jerome Powell's Jackson Hole speech, the impact of seasonal factors on economic indicators, why we're moving into a deflationary environment, and more. Cathie also discusses fiscal policy, monetary policy, market signals, economic indicators, and innovation, especially during periods of heightened volatility. Make sure to stick around till the end of this video, where Cathie Wood shares her outlook for crypto prices in the coming weeks. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
And it means that the inflationary pressures that are concerning the Fed are probably going to unwind now very quickly. It is true, the last year, against our expectations, has been a very difficult one when it comes to inflation. I never dreamed, given all the new technologies in place to take care of these things, that the supply chain issues that started in April of 2020 would extend for more than 2 years. It's still pretty shocking to me. We do believe those are loosening up now. We're getting all kinds of reports that that is the case. And we also did not predict, no one did, the Russian invasion of Ukraine, which has sent food and energy prices soaring, which is a really cruel tax on the consumers around the world.
A lot of traders are losing money on the falling markets, and cryptocurrency market is unpredictable, and the bear market could win over the bull market. So how can you earn profits in a bear market? Diversify your trading strategy by trading on markets and utilize long and short positions. Welcome to Margex. It is a Bitcoin-based multi-asset trading platform. You can earn profits by opening long and short positions even in a falling market. BTC and other top cryptocurrencies are available at 10x leverage. There's no know your customer, and Margex has been nominated by Finance Magnets as the most user-friendly trading platform. Margex also features a killing MP Shield feature, and that's a system that protects traders from illiquidity and price manipulation, like the flash price crashes and the liquidate short or long positions often conducted on competitor platforms. Margex also gives you the exclusive bonus to try leverage trading without any of the risk involved. You can sign up on Margex in a minute using an award-winning interface. So to do that, just sign up on Margex. Make sure to use my link in the description below. Join the wallet section. Then you can enter my promo code in the promo code section, which I'll show you how to do that. You just hit use promo code and then go ahead and enter the promo code in that section. Then you get $100 free funds to trade and test your trading skills. Every Margex user can trade BTC, Ethereum, LTC, XRP, EOS, ADA, Uni, SOL with up to 100 times leverage. The minimum deposit is only $10 and the minimum trade size is $1. Margex users can pick between cross-margin and isolated margin for each trade. Cross-margin shares the trader's available balance among all open leverage positions that use cross-margin. To go ahead and open a trade using cross-margin, simply head to the Order Submission menu and click on the leverage method used, either using the pen or scrolling all the way to the left on the slider. As you can see, Margex trading fees are extremely competitive compared to other major crypto exchanges. The low fees are pretty amazing to behold, especially considering the MP shield that makes trading much safer than other cryptocurrency derivatives and trading exchanges. In addition, it is possible to use 10 cryptocurrencies as a deposit position. Margex offers BTC, USDT, USDC, DAI, ETH, Link, WBTC, USDP, Tron, and Polygon as available collateral. So, what do you need to do? Let me remind you how the promo code works. Sign up to Margex using my link in the description. Join the wallet section, then enter my promo code in the promo code section. And then perfect. Get $100 free funds to trade and test. Thank you very much for watching this, and I hope it was helpful to you.
As I mentioned earlier, we had a nice rally. Some were calling it a bear market rally. 23%, I think, on the S&P 500 from mid-June to mid-August. And now we're giving back. We thought one of the reasons for that rally was that the Fed was going to pivot, and that the market, seeing the deflation in the pipeline, assumed that the Fed would start talking about that deflation. Instead, we got Jackson Hole, and now the market's relapsing. We do think we're in a bottoming phase here, because we think we're going to see a lot of deflationary signals that will, at some point, get the Fed to talk about them. It doesn't want to talk too soon. It doesn't want to give anybody any indication that it's anywhere near pivoting. It wants to sound very hawkish, wants everyone to believe that they're going to be as tough as Volcker was, in order to get to 2% faster than would otherwise be the case. You know, it could be a lot less than 3% if some of these big retailers start slashing, they need to, prices in order to clear the shelves and put in holiday merchandise. So we'll see in the next few months. As to markets now, so starting with equities, we've talked a little bit about that. As usual, equities are very dependent on a couple of things: profits and valuations. Now, we think profits are going to be hit hard here. More the cyclical part of the world. Our strategies are not biased cyclically. If anything, they're biased completely in the opposite direction. And they tend to do well when overall profit margins are coming down. Now, profits in the GDP accounts looked like the early indications were that they were down significantly quarter to quarter in the second quarter. It seems as though they moved up to an all-time high. What I have found with these metrics around turning points, these metrics and especially employment, is the revisions. If we're really in recession, the revisions are extreme. If you listen to all of the companies reporting, you would not believe that profits are up. Many of them are down, and down in a very big way. So again, this dependence on economic indicators, which may be distorted by seasonal factors gone wild during COVID, and an inability to adjust them accordingly, could be distorting some of these numbers. The second variable, valuation, very dependent on interest rates, which in turn are dependent on inflation. And you know what we think. But the bears think we're going back to a 70s style inflation and valuations dropping to those levels. That is the essence of the fight taking place, this tug of war as we try to bottom up in the market, bottom out. I do think Europe's in recession. I think China's in recession. So the US really is the swing factor here. On a year-over-year basis, gold prices are down 10%. Copper prices are down 21%. Lumber price had gone from $250 per unit of whatever sheath, and all the way to $1,700. Now they're back down to 486, and on a year-over-year basis, lumber prices are down. No wonder housing is in a world of hurt. Energy and food are the sticklers here. Again, Russia, Ukraine. Right now, oil prices on a year-over-year basis are up 19%. But if we stay around this level, given what happened last year to prices, we could be flat by November on a year-over-year basis. Corn today is up 24%. We know the drought and bad yields are contributing to the Ukrainian problem. We know crypto prices, they're down 60%, both Bitcoin and Ether on a year-over-year basis. And it is interesting that they're trying to stabilize in this range while other commodity prices continue to capitulate. And I'll end right now on talking about the impact of innovation on inflation. We are seeing artificial intelligence training costs dropping 60% per year. And we're seeing mind-blowing breakthroughs in artificial intelligence. So that's a huge deflationary undercurrent, and AI is going to become a part of every industry, every company. And those who harness it the most intelligently and strategically are going to be the winners. And then, with Wright's law, which says for every cumulative doubling in the number of units produced, prices associated with each technology decline at a consistent rate, that in the industrial robotics space, that rate is 51%. In the battery space, it's 28%. In the DNA sequencing space, it's 28% for short read and 40% for long read. So we're seeing deflationary forces that are beginning to matter. Electric vehicles now, it depends where you are. In China, they account for battery electric vehicles, not even including hybrid, account for 19% of all sales. In Europe, it's 10%. In the US, it's closer to 5%. So these are beginning to move the needle now. And I think we'll be shocked at how low inflation goes and how long it stays there. Now, this is good deflation. Falling prices associated with new technologies causes booms in unit growth. We're seeing that in electric vehicles now, even though the economy is so weak. They're better, faster, cheaper, more efficient, what have you, less of a gas guzzler. So we think this is going to play out, and the surprise during the next 5 years is the deflationary undertow that we're going to be experiencing.
So, what are your thoughts about Cathie's perspective on recession and market signals? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.